Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular stocks from the week that were in the news, maybe had big drops, maybe there was something important going on with them during the week. And if you like this video, be sure to subscribe below so you're notified about our future Smart Investing Weekly Stock Analysis videos as well. But today we're going to talk about energy. I guess is a good way to start off this video. Is we're going to talk about an energy company here. I mean, it's been quite prevalent in the news. We know oil prices, gosh, hitting levels we have not seen in years now.
And Chase, it's funny, had we done this video a year ago, you say energy, they'd turn it off. Like, energy, what are they talking about? Now we got the interest. Now is it too late to get into energy? They've come up an awful lot. So I'm excited to kind of look at our company here. What is it? Exxon Mobil is what we're going to look at today for people.
Yeah, it's just a small energy company. But I did want to talk a little bit about energy first too. It's been crazy seeing oil top $80 a barrel for the first time since I think it was 2014. I think gas prices are now at levels that we haven't seen since 2012. I mean, it's not just oil. I mean, a lot of people need to realize that there's a lot of other, I'm going to say, components that are derivatives of oil. So they're having to actually see increasing costs for natural gas, for gas at the pump. Electricity is also going up. I mean, this is all stemming from expensive energy.
And the other thing too is that will the energy demand come down? I don't believe so. I think next year it's even going to be higher. The problem is the supply has been cut here in the country because of things that the administration has done, which we won't go into, but just say that the supply is not what it could have been. Therefore, supply demand issues. High demand, lower supply is going to raise your prices. So you probably want to own some oil company if it's on sale. We just don't like to buy things just to buying, again, the greater fool theory. Buy them at one price and hope that there's a greater fool out there than you to buy it at a higher price. We like to get value there, which may not be in any oil company, but we thought we'd start with Exxon Mobil to see what that looks like.
Yeah, I did want to say too is especially on the demand side is we haven't even really seen international travel resume yet. I mean, that's kind of going to be another added bonus, so to speak, to the demand equation, which is problematic. If we don't have the supply, it means prices could go even higher. And I still think that $90 a barrel oil is likely by the end of the year, and it's possible that we see $100 barrel or $100 per barrel of oil by the end of the year as well.
And that's just kind of frightening what you think the gas price at the pump will be here in California. Now, if you're not in California, it'll go up. But here in California, we probably will see that $5 number on regular gasoline, I think, by the end of the year, which is kind of frightening.
And the thing that I will point out, the reason the energy companies are so important is generally with rising oil prices, that's where these companies like Exxon Mobil can do quite well. And I don't know if you saw this forecast, but I'm going to bring it out here. I saw JP Morgan, I believe the number they put on their worst case, and this is a 5-year period, their worst case, $190 a barrel. I was like, oh gosh, I hope we don't get there. Now you're talking what are we going to pay in gasoline? $7 a gallon? That'd be terrible.
Yeah, we probably more than that, probably like $10 a gallon. So that's about double what we're at right now. We're about 80, so 150, 160. Yeah, so you're talking about $8 to $10 for gas. Which, keep in mind too, is that as the price of gas goes up or oil, your percentage of fees will go up as well because based on the price of the oil. So the percent will stay the same, the dollar amount will go up. So you could be spending. We kind of did this post. I think that's about $1.40 in California is all the fees. Well, at a higher price on oil, you could be spending $2 to $2.50 just on fees, not including that. So it's just
the gas tax of 51 cents. That's a flat rate. It's just a really high flat rate. But anyways, we do want to take a look at Exxon here because they again could be a big benefactor from elevated oil prices. So with that said, let's see if we missed the boat on Exxon or see if there's still some potential here based on the numbers for the company.
And again, I'll point out that when we do this, this is new to us as well. We didn't pick this based on this. We've never seen these numbers before. We pick the company, we kind of share with you what we're looking at. So let's start off with, again, Exxon Mobil. We do see, excuse me, that they're in the oil and gas integrated industry. The float, not very much on the short side. No one's shorting this company at all, 0.9%. I'm surprised that there's only 53% of institutional ownership. I thought that would be higher.
I will say, sorry to cut you off. I was thinking about it when you were just saying that. is it's kind of like one of those big companies, like I think GE was for a year, or AT&T as well, where a lot of retirees buy the Exxon Mobils, the blue chips, just as kind of a safety play, so to speak. So I was kind of shocked at first, and I started thinking, I think this is one that a lot of retail investors just have as a dividend type payer.
Yeah, yeah, that could be. And I remember there was about a year or so ago, we were concerned they have to cut their dividend. They did not cut their dividend. So I think a lot of people are very happy they stayed with it. But we still unfortunately see that the PE ratio for the last 12 months, not material because they do not have earnings yet. I'm wondering if that will change after this quarter reported for the end of the third quarter. That could change, but right now it's not material versus 15.6 for the industry. Price to sales also looks expensive, 1.3 versus zero point 0.7. Price to tangible book value, 1.7 versus 4.3. So that's a positive. And also, too, I notice here the price to book and price to tangible book are the same at 1.7. I'm surprised. It means the company has no intangible assets. These are tangible assets that you can touch and feel and hold. So that's a positive for Exxon Mobil. Price to cash flow, unfortunately, does look expensive, 9.8 versus 4.4. Now, the PEG ratio, which is price earnings divided by the growth, indicator of how much you're paying for the future growth, 11.9, which is high, but even the industry is high at 17.9. So the price of these stocks have really come up a lot, much higher than the growth has been. Now, looking at the earnings per share growth for the 1 year, 5 year, nothing there for Exxon Mobil, nothing for the industry, with the exception of the 5-year growth is 24.6. Now, we do see a turnaround in the sales here for the 1 year percentage increase of 9.6%. They are beating the industry at 3.3. 5-year down 0.3%, which is worse than the industry at 0.2, but it's only 0.1%, so I'm not going to worry about that. 5-year growth rate, well, again, we've gone through some very difficult times the last few years, only 1% versus 2%. Not worried about that.
And that is going forward too. So it's just not expected
Yeah.
to kind of,
Yeah.
I want to be clear on that for people. I don't think oil is going to have, huge gains for this company.
Yeah. I mean, it's what you're going to kind of look at going forward. Again, that's a 5-year time frame. Now, maybe if you hit that 150 per barrel that JP Morgan's talking about, that could be higher. But that's what we see going forward based on the analysts. Looking at the dividend yield, this is nice to see, still 5.6%, which is better than the industry at 4.9%. And I know the dividend before, gosh, I think the stock was, you'll point out, I think the stock was in the 30s, probably yielding about 10% back then. Payout ratio, not material versus 143 for the industry. Again, right now, Exxon has no earnings, so its payout ratio is not going to be not material. We do see that on the balance sheet. Let's look at the balance sheet. Current ratio 0.9 versus 1.2. I wish that was higher. Debt to equity looking very good, 0.4 versus 0.5. And this is, I thought before the debt was higher than this. And keep in mind, I talked about that they have no intangible assets. This is a very strong balance sheet for this company. I would not be worried holding this company if you can get it at a good price. We also do see the net profit margin still a negative 6.2% versus a positive 4.5. Return to equity is a negative 8.4 versus a positive 3.5. And again, keep in mind, these are all past 12 months. We also have to look at going forward. With that, I'll turn it over to you, Chase. Look at some numbers going forward here.
Yeah, so let's take a look here. First, the current price for Exxon Mobil is $62.59. 52-week high, $64.93. I'm surprised actually that was back in June of this year. I thought they would have hit their 52-week high pretty recently with the recent spike in oil. With that said, I wouldn't be surprised if they hit a 52-week high here shortly. But 52-week low, as you mentioned, in the 30s, yes, $31.11 last October. Huge increase off that low. You can see year to date, the stock's done tremendously, up 59%. So question is, did you miss the boat on Exxon Mobil, or is there still some value left in it? With that, we want to look at the forward estimates. We'll go out to December 2022 in this case. We see that the estimated earnings per share, $5.33, would actually give us a target sell price of $88.48, which is an estimated return here of about 41.4%, plus a nice little dividend for Exxon Mobil as well. I always do point out with these energy companies, you can see the spread between the analyst estimates, quite high as the low as $4.13, the high $6.98. but I do have comfort in there being 25 analysts. That's a good sample size to really get a good number there in terms of the estimate. So, I mean, the value's there for Exxon. We like the balance sheet. But I think I would be patient with this one. I think on a pullback, it could really present a good buying opportunity, but just with the recent run up, I don't like to buy things near the 52-week high.
Chase, can you pull up that last chart that you just had there?
I sure
Uh,
can.
because I do want to go one more year out, which was December 2023. You see, there's 17 analysts, but now the earnings go down to 515. I think that's going to change going forward, because that kind of tells me maybe analysts aren't ready yet to raise their prices. So don't be afraid of that. Again, you went from 25 to 17 analysts. I think that's going to turn around. So I gotta say, I'm kind of liking Exxon Mobil. I don't see, unless the current administration says, hey, let's reopen those pipelines, let's go back to drilling on federal lands and so forth. I don't see that happening. And again, we're at the mercy now of the Middle East again, which they can say, sorry, we're going to raise the price again, and we can't do anything about it. So,
I know. I know that we were energy independent in 2019. Unfortunately, now we are energy dependent on some of our favorite players, including Russia. And of course,
yeah.
I'm being facetious there. We're not favorites with Russia there by any means.
And good or bad, this administration is going to be here for 3 years, so you got to work with what's in the office, and this is how we see it. That energy, I think, is going to be a good play for the next 3 years.
Yeah, but as I said, I think maybe watch it here. We've seen a lot of volatility in the market. I think on a small pullback on Exxon, I think the patience will pay off in the long run.
Yeah. All right. Well, I like it.
Yeah.
I guess we're done for this Friday. Should we go home? Or we got more work to do?
We got more work to do, but I want to thank everyone for joining us today. If you like the content, again, please be sure to subscribe to our YouTube channel for upcoming stock videos. This should not be used as investment advice. It is for informational purposes only. If you're interested in learning more about our investment philosophy, visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com.